Alphabet stock, ticker symbol Google. This Friday, the 15th of July, Google will do a 20 stock split. So this basically means that every share is cut into 20 smaller shares. This doesn't change anything about the fundamentals, of course. But it's quite interesting to see that Google stock is down 22% year to date, which is similar to the S&P 500, which is down 20% year to date. So, is this the perfect time to buy Google stock? In this video I'm going to show real quickly what Alphabet, the mother company of Google, does, a view at the historical returns, the fundamental analysis, and in the last part I will give you my price target to see if they are a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Alphabet do? Alphabet is a holding company with Google, the internet media giant, as a wholly owned subsidiary. If we check the latest quarterly report, we see that the revenue breakdown of Google, which is divided into Google Services, Google Cloud and other bets. Google Services is divided into Google Search, Other, YouTube, Advertising and represents around 90% of the total revenue and is up 20% year over year. Google Cloud represents 8.5% of the total revenue and is up 45% year over year. The last segment is Other Bets, which represents less than 1%, but went from a negative last year to a positive number this year. So very interesting to see this part of the business growing. Another interesting number is that only the Google Services part, including the advertising business, is making profits right now. All other parts of the business are losing money. But you see some growth year over year, so that looks really good to me. And now a few things about Google itself. The first being that I have around 10 years of experience with advertising in Google using Google Ads. And a lot of things have changed during these 10 years. I've worked with small companies, but also with some big companies where I spent multiple millions in advertising with Google. But one thing that changed a lot is that more and more people are advertising within Google. And this is the best thing that could happen for Google, of course, because this increases the revenue in general, but also increases the CPC, the cost per click. So revenue is boosted twice as fast. In this graph we see that they made big jumps within their advertising revenue, and especially in 2021. This is also because of the booming e-commerce. So on one side you have an increasing in the amount of money that you could ask from the advertisers, and on the other hand more and more people are clicking in the ads because e-commerce is booming. So this is something that's really interesting and of course will highly influence the future of the business. So now that we know a bit more about Google, it's time to check the historical stock price to see what happened there. So first of all, it's very hard to compare Google to any other company. They don't have a moat, but they are the industry. You have some competing search engines such as Bing, which is owned by Microsoft, but it's just a small fraction of the Google advertising business. So in this case I'm including Meta, which is also focused on the advertising revenue. Next to that I'm including the S&P 500 as a benchmark for the market average. On the 5-year chart we see that Google had a return of 135%, which is quite a lot compared to the S&P 500 returning 70% including dividends. And please notice that the blue and orange line were really doing the same in the past 5 years. But since the pandemic, Google stock really did outperform the S&P 500. And believe it or not, Meta is up only 2% in stock price in the past 5 years. And on the one chart we see why. Meta had this big drop where they fell down a lot and never recovered from so far. Google is also down 10% on the 1-year chart, while the S&P 500 is up 4%. On the 6-month chart we see some similar results between Google and the S&P 500, both down around 19%. On the 1-month chart we don't see anything special. Google is up 2.5% while the S&P 500 is down 2%. Meta is down 7%. So now that we know more about the price movements, it's time to check if Google is a buy at current prices. And keep in mind that although a stock split doesn't change anything about the fundamentals, the stock price can become very volatile in the coming days or weeks. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to receive similar analysis to this one every week. And also don't forget to like this video. Let's continue by diving into the fundamentals. Google is a 1.48 trillion market cap company, which makes them one of the largest companies in the world, based on market cap. The 12 trailing month revenue is sitting at 270 billion. And in this chart we see that revenue went up quite nice and steady, and really took a jump during and after the lockdown periods. So this really looks good to me. Net income sits at 74 billion, which gives us a 27.6% profit margin, which is pretty high, and also above the 5-year average, so margins are increasing, also by the fact that I told earlier in this video. Current PE ratio is at 19.9, which is around the fair value for a company in general. But you want to think twice about which PE ratio is acceptable for this company, since they really do own the business of advertising online and are growing in revenue. They have a 5-year revenue compound annual growth rate of 23%, which is a lot for a company this big. And in the past 3 years, it's pretty much the same number. On top of that, net income is growing at almost 40%. So I do understand that you want to pay a lower PE ratio for a company this big. But guys, please, this is literally a money machine and they are still growing in high amounts. But of course, it will be harder to sustain these growth numbers in the future. So make sure to watch until the end, where I will show you my 3 price targets. But for now, let's continue with the return on assets, which is sitting at 11%, right above the 10% minimum, so this looks good to me. Return on equity is also looking really good at 30%. Return on invested capital is at 24%, which is really high for a company this big. It's also significantly higher than the 5-year average, so these numbers comforts me a lot. Next up is the balance sheet and cash flow statement, and this is why I love Google. Total cash is at 133 billion, operating cash flow is at 97 billion. Leverage-free cash flow is at 52 billion. So they can easily pay off all their debt and still have a lot of money left. Right now, total debt is at 28 billion, so this comforts me a lot. Free cash flow is also used to buy back shares, do acquisitions, research and development, and dividends, which Google doesn't pay right now. So it's very important that free cash flow is growing. And in this graph we see that it went up quite a lot in the past couple of years. But to be honest, I would love to see a bit more consistent pace here. So it looks good, but keep an eye on this pattern in the future. Since Google doesn't pay any dividends, a lot of money can be invested back into the business. One way to do this is by buying back shares. And to be honest, it looks quite interesting to say the least. Up until 2018 they issued a lot of new shares. But ever since 2018 they bought back a decent amount of shares. So this looks really good to me, especially since they announced a 70 billion share buyback program. So this will add a lot of value to the investor and comforts me a lot again. The last part of this video is about the price targets. I'm using the Everything Money software, which is really one of the best out there to analyze companies. This is not sponsored content, but just my honest opinion. Please check them out. So without further ado, let's check what the price targets we get with a low, mid and high assumption. For revenue growth, I'm filling in 10, 13 and 16%, because I do believe this company will grow in the future, but since it's already a huge company, I want to be a little bit conservative with these numbers. For the profit margin, I'm filling in 22, 24.5 and 27%. Free cash flow margin 21%, 22.5% and 24%. PE ratio, well, this is a tough one, which we discussed earlier in this video, but I will go for 19, 21 and 23. And I will use the same numbers for the price to free cash flow. And my desired annual return will be at 12.5%, since you can buy an ETF which easily generates around 10% over a longer period of time. Right now, before the stock split, Google stock is at $2,200. Based on my assumptions, Google stock is a buy. Even with my low price target, you are not far away with $2,140. Mid assumption is at $2,900 to $3,100, and my high price target is at $4,200 to $4,700. So to be honest, I think I would go for a low to mid range, while I think the mid range is the most realistic one. My final conclusion on this stock is that Google is a real money machine. I do have more than 10 years experience in working with Google as an online advertiser, and I did see the business changing a lot, and also the landscape where it's operating in. For me, Google is a buy at current prices, But for now, I will wait for the stock split this Friday, and right after that I will start buying Google stock. But remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.